right, Josh, we got our first caller here today to the Call-In Trading Show at Trade the Pool. Mr. James calling in who wants some advice. I think he's been trading for about a year, and Josh and I collectively, we've been doing this, moderating, doing one-on-ones for about 15 years. So we certainly have sound advice for James for some of his questions. So James, tell us a little bit about your experience, how long you've been trading, and some things you would like to shed some light on.
I've been trading since September last year, so about a year now. I had got a little bit of money, put it into Robinhood and traded on it and lost all of it. And then it just been trying to figure out, mostly psychological, because you're in a trade and then you're looking for a specific move to happen and you feel like it should happen based on whatever your technicals are, whatever your idea of the chart, and then it just does the complete opposite and then you take a big loss. Or sizing into my losers is something that I have a big problem with, sizing into my losers.
We got a lot to touch on here. Yeah, a lot to touch on here.
But yeah, it's mostly psychological, mostly. I know that for a fact.
So your first account at Robinhood, what happened there? How'd you blow that one up?
What happened was, I'm sure everyone's familiar with Ross Cameron in here. And I don't know, are y'all familiar with Ross Cameron?
Yes, sir.
We are.
I was going doing his little pay for his thing to be a part of his chat and be a part of his team, and went over there. And what my problem was is I at the time, that was my first time trading, and I wasn't 100% sure as to what I was doing. I have a big green day, and then I'll be like, oh, I'm doing great. I have a good idea what's happening. And then instead of getting my losers and just letting them be small, I'll be stubborn and I hold it forever, or I end up having $300 losses, $500 losses, $600 losses. One of my biggest losses of all time was with SLXN. I think that's what it was. And I was just so stubborn looking at it. And I was like, you know what? If it's meant to lose, I'm just going to lose. And that's just not how it works, So it just kept going lower and lower and lower and lower. And I lost probably like $600, $700, $800 on that trade, which for me is a lot. Like I think I only had like $3,500 in the account. So then I just kept trading off of emotion, kept trading off of, just the first thing that pops up, let me jump in it. First thing that pop up, let me jump in it. And it just kept going the other way because I wasn't looking at any technicals. I was just trying to buy the first thing that went up.
Yeah. You sound like what I call doing the squirrel. You think about a dog, you went, squirrel, there's one, squirrel, there's one, squirrel, there's another one, and then you do the whole, it's going up now, it's breaking up now, it's going down now, and everyone does that at first. So, that's definitely a problem a lot of people face.
Yeah, I heard a lot of common trading problems there that all revolve around essentially ego. I think you nailed it, James, on the problem is you. The problem's not the market. The market's printing information. The market is you're oversizing, your ego's getting more too involved, you're having expectations as far as what these tickers should do. I know when we get into trading, especially if you're watching some of these chat rooms and you see how much they're making, that has an impact on our personal performance, right? We see that and then we want to emulate that. And so the trades that we take, we may oversize on to achieve that, or we may think that because we're in this trade, it should work out essentially. When essentially there should be no expectations when you enter a trade. Expectations are a visual representation, James, of what you think is going to happen. So you got to remove the you from the trade. You have to detach yourself from the outcome. When you enter a trade, say, I don't know what's going to happen. And that's not easy to do because it's different from any other job out there. Every other job, you can't detach yourself from the outcome. The outcome is the result of the work. Trading, take the edge, embrace the risk, and ultimately accept the results no matter what they're going to be.
Exactly. And what happens is you end up not accepting the results, and you just, okay, I'm looking at this and I think it should do this versus what it's actually doing. And instead of what it's actually doing, and you're just trying to take what it's actually doing, you're going off of what you think it should do. And now I'm sizing into it because the one that crushed me the other day, PPBT. Yeah, that one crushed me the other day. That was the one.
Well, it didn't have to. I mean, it didn't have to. So why did you allow yourself to get crushed by that ticker?
Okay, so what happened was pre-market, it pops up and I looked at the daily on it and I'm like, okay, it already did a big flush on the daily. It went from 280 to, what was it? I think at the time it was some like 120 and it was popping up, and it popped up yesterday, all the way yesterday morning. to like 220. Oh no, was it the day before yesterday? No, I think it was yesterday. Yeah, yesterday. Yeah,
It
yesterday.
was yesterday. It was yesterday.
Yep. Yesterday it popped up all the way up to like 220. So I get in at 220 for the break of 220. And because that's, that's something that I've learned from
You just said it went
from,
all the way up to 220. Then you said, I got in.
Yep.
That sounds like the problem
Yep,
right
I got
there.
see, this is my problem. I got in at 220, okay? And it went all the way up to 260, and I should have sold and took my profit. But what I did was I was like, you know what? I'm going to hold it and see if it goes higher, because it just went from 144 to 260. So maybe, it just had 3 big green candles, maybe it'll keep going higher. And then it pops down, it came lower, and I added at $2. And then it popped back up to 240. Now, mind you, my average is down. I should be taking my profit here, but I don't. And I'm like, you know what? I think it should break through that high of 260. And then it goes down, and it comes all the way down to 190. So I add, it pops up to 2, and then it goes down, then it goes then it shoots down, and it ends up at 140 at some point. And I don't know why I'm still holding at this point. This is what I was saying, is like a psychological, like, okay, I think it's gonna go lower type thing.
Well, Josh and I have seen this a lot in traders. What are your thoughts there, Josh?
Yeah, no, it's and one thing. The first thing I see a lot of traders do, and the mistake of it, is that not having a target before you enter a trade. Every single trade you ever take from now on, make sure you have a target ahead of time. And if it doesn't hit that target, you've got to understand that, which it did. It hit 260. I'm looking at it now. When you come back up to that mark, that's traders letting you know where that resistance is going to be at. There are going to be a lot of selling on that tape at that 260 area, and then you have to take it. And let's not continue to add into a losing type of trade, because this is what's going to happen. Leads to, which we talk about all the time, holding and finish the sentence, guys. Yeah.
Holding and hoping.
Yeah, there's a big difference between adding to a loser and then scaling into a winner. You got to define the difference there. And it like Josh said, I heard no trading plan. That's what I heard from what you were saying. You were adjusting it mid-trade. A lot of newer traders do that. You've been trading for less than a year. So, I mean, that's what happens. You need to define what the trading plan is going to be rigid with that. The only thing you should be flexible with is on the profit expectation side with a leftover position. You got to take the predictable piece off. So when you're up X amount and it's up there at resistance, take that off. You can leave a piece to run, but set a trail on it, set an adjusted stop at break even with that piece. Take the predictable piece and move on. The most experienced traders do not have a crystal ball into what the tickers are going to do. The one thing they do know is exactly what they're going to do. They know their reaction to what the market's going to do, and they don't change it based on what the ticker's doing. You noticed
Yep.
Go ahead.
I'd say get some Post-its, and I used to have Post-its on the bottom of like my main monitor, because I used to only have 2. Get some Post-its and put this on it. Create a plan and stick to it. And from now on, start doing that before you ever enter every trade. It was, honestly, even looking at it, it was a great trade for you. Even the add-in, honestly, at the bounce and dip at 2, which was where you added in, was actually, if you look at it and you have the chart pulled up, you do that on one of these future shows, start being able to pull up some charts. It was a form of resistance. You got in it. A former, I always teach it. What? Old resistance equals what? New support. It's a great dip. You added in at the VWAP and a dip at 2, but then you just ultimately didn't learn how to have a profit-taking area. And so your plan was, we'll call it 30%, formed. You didn't have a target and you didn't have a stop loss. You had an entry area, but you didn't have the other 2 key components, which is you got to have a target and you got to have a stop loss.
Absolutely. So, James, as far as these accounts have gone, I mean, where else have you seen where you can do a little better at? As far as some mistakes, oversizing. Do you think over trading as well?
Absolutely over trading. And while we're having this conversation, these are like epiphanies I've had within the last week. And I'm just like, today I'm like, I fully, because what was happening was I was looking and hoping for, okay, all I have to do is make $300, on a $5,000 account. And it's like, that should be easy enough, but when you're thinking about, how the market has been working, especially recently, where a lot of trades haven't been like, continuation hasn't really been happening. There's been a lot of bounce backs. There's been a lot of just kind of stagnant, going sideways, and then for the rest of the day, and then the next day it goes up even higher. So it's just been a lot of like prime example SOGP. Like it would go up, and then it would sit for a day or two, come down a little bit, and then go up some more, and then sit, and then go up some more. But today it kind of came down from where we were at 33, which I had to learn to let my losers be small and add into my winners.
And what time, I'll ask you this, what time of the day are you trading? Are you trading all day long? Do you have a certain period of time that you are trading? Have you identified that?
I have identified that. I have learned that I trade terribly pre-market. And the reason why is you can't set your stops. So I can't put in, okay, let me cancel this trade here while I'm up $900.
and there goes that over there. That's why it kind of goes back to that maybe over trading. There goes back to that. There's that. So we're addressing that issue.
Got that itch. We got to scratch.
I'm still I haven't let go of the HOUR trade.
Yeah.
Okay.
I'm just not letting it go.
I thought you were about to enter a trade. I'm like, you're going to enter another trade while we're on this call?
No. I had to let go of this trade because
need to call Traders Anonymous.
Back up a little bit.
Not the call. Call Traders Anonymous. You gotta focus on the edge, James. That's what I see with newer traders. That's what I'm seeing with you. Is they, like Josh was saying, squirrel. You gotta figure out where's the most predictable setup that I see, the pocket pair ace hand, and stick to that. Trade that well. Less is going to equal more. Random trading, random sizing is just going to equal complete randomness. And I think that's an epiphany, like you said, you've had. And I think that's going to be one of your bigger takeaways from this: is less is more. Let's focus in on the better setups and size those, like you did today with HOUR. You did very well there, and then just kind of forget the rest.
Yeah, and what happens, like what I was saying before, make sure I got out of that trade. The pre-market, you can't set, my losses or put up like automatically. Like you have to try to catch it. And sometimes I'll sit there and I'll try to catch it, and then it'll keep going higher and higher. And by the time I catch it, I done lost $100. That's my max loss on the day. Or I lost $60 and trying to work with $40 for the rest of the day, is really difficult because now I'm trading with 10 shares or 20 shares. And like I was telling Kevin earlier, is that it's kind of hard for me to trade with such small share size, with less than 50 shares, because I try to stay between 50 and 100 shares. So it got difficult for me to trade at 10 shares for $5 or 20 shares for $10. And so I would still, instead of sizing down, I would still stay at my 50 shares to 100 shares, and then 40 cents, and then I'm done the rest of the day, or I done blown the account because this is the second day I lost $100, or the third day I lost $100. So it's like it became really difficult, with the $100 max loss.
Yeah, true. I understand that a lot of traders face that at first, and the one thing I always try to tell traders, though, honestly, in the end, is worry about being right. Who cares how much money you make in the end? That's going to come down the line. So try to and I can't stand looking at my P&L. So I don't have my P&L up anymore, like on Thinkorswim or on Trade the Pool. I don't ever really look at it. So to me, always, like, we go back to that, form a plan, create a plan, and stick to it, and see how often that, even back to what Kevin was saying, again, finding that pocket of aces and getting it better. I've had that asked so many times over, like, hey, Josh, this is what I do good. Should I work on this now? Like, no, get what you're good at even better. And then when it's better, get it great. And when it's great, make it excellent. And then make it perfect. And then maybe worry down the line, because you can just rinse and repeat that strategy day in, day out. And so don't worry about how big you have to go in. And if you're down to 10 shares or 50 shares or whatever it is with your trading style that you're doing, just make sure you have a plan. So you have an entry, you have a target and a stop loss. And I promise you down the line, because I faced that at first. I didn't have a Trade the Pool back in the day. I had to, like you, I had a $3,000 account, and I was under the PDT rule because, of course, I wasn't trying to short. There was just and of course it's cash if you want. You can go cash account and go long. But yeah, it's one of those things that you face that burden early on. But I just told myself, like, Josh, what's your base hits now? What's your average share size? Like you were saying, let's do the same shares every day. If it's 100, it's 50. That's fine. Keep rinsing and repeating that, and then find what you're good at and do that each and every day. Because imagine your base hits now are $80 or $50 or $30, and you have to go smaller share size. Maybe they only $5 or $10 or $15 wins. That's fine. It's not about how much money you're making now. It's about having that average win rate and that 2-to-1 ratio. So down the line, like I told myself, my base hits were $80, $50, or $100 like yourself. I'm like, if I keep doing this right, and like now my average base hits because I go bigger share size. So now my average wins are 300 or they're 500. Or when I got into the groove and I had my edge in 2023 into 2024, I had a shrink. My average win was over $1,000 per trade for a while. So that was a base hit. That was an average day. So then I had days where I was making 4 or 5K a day because I had bigger trades. But that comes down the line where I just told myself at first, like, Kevin was just saying, you got to put that all out the window, find your edge, rinse and repeat that every day, and have the emotion detachment if you can, as much as you can. And going the smaller share size should help that. And you just rinse and repeat at what you're good at. If you do that, you'll find your edge, and then you just do that every single day to where down the line you're going, oh wow, I'm making more money because I'm doing the same thing every day, and I'm going bigger share size because I actually can stable. I always said I have a stable mindset. The bigger share size you go, the more unstable your brain is going to be when you handle those trades.
Yeah, it increases the bias. And I want to touch on what Josh was saying about focusing on being right. And the interesting thing there is being right might be red. It might be red for you.
Yes.
That is going to be part of the plan. You got to focus on, I know we hear it all the time, the process. You got to be process oriented and not results oriented. So small loss, small winner, big winner. If you stuck to your plan, then it's going to be a great trade. Focus on trading well, and money's going to be a byproduct of that.
Exactly. So a lot of times, like, especially now, like with the HOUR trade, I know that I'm in at 450 short. And I know that, okay, if it comes to, once it dropped to like 410, it's like, okay, so like, okay, I'm in 410, I'm in 450. If it comes back up to 440, get out. Or if it comes back, or not even my average, just make sure I get my 10 cents and get out of the trade. It never went back up to 440. It just kept going lower. Okay, now I put it lower. Okay, now if it comes back up to 430, get out. Now if it comes back up to 420, get out. And having that idea of what I want to do then kind of gives me okay, now I'm in the profit, and I'm not just, okay, well, if it goes negative, I'll get out. Because that's something that I did a lot. It's like, okay, well, I'm in a green trade. And I learned that a lot about myself is I'll be in the green trade. I'll be in the green, like on the day. But instead of just taking that small win, I'll just try to push it for further. And next thing you know, reverses, and now I'm in the negative. And that's something that happened to me a lot, right? A lot.
Yeah, I think that's been talked about in that live stream a lot. We've been, when I'm on the Tuesday and Thursdays with Kevin, is that having that trailing stop. So that's what you're doing there. So that way you make sure you leave that trade with green. And I'd say the biggest takeaways, honestly, in this would be, and every trader is going to struggle. You always talk about kind of paying that tuition in your first however long in stock trading, and you're doing that. You're paying your dues, so to speak. But to me, it's like, what I've heard from you is let's not trade pre-market. Leave it alone. Well, I would even probably leave the first 30 minutes maybe of the day alone and wait for trades to come to you like this later in the day. Take your slow and steady, easy 1 to 2, 3 trades. Let's limit those trades, keeping that same share size. So you're not worried about, well, I've overtraded. I can't trade now because there goes, right? Because you're having to go down to 10, 5, 15 shares. Well, if you just wait, take the 1, 2, 3 trades a day with your 100 shares that you want to, and wait for trades to come to you. That's where I think, and then having that stable plan that you just talked about, because then also when you trade a little bit later in the day, there's a little less volume. So there's less volatility for you to get stopped out quicker. So I think that would be your route moving forward for the rest of this year, and keep practicing that. And the other thing, which I'll ask you, because I always ask this, I do a lot of one-on-ones with traders across the globe. And one of my biggest questions is, do you journal and track your trades?
Through TTP. So that's how I check my trades out.
Just go through them every day. What my journaling system was like, notice when you're getting in, right? Notice what time of the day. You've always got to notice that. When are my successful trades? What share size is that? You always got to notice that. And the biggest takeaway is, what pattern are you trading? So when you're trading that, you have to go through there and go, was I trading a bounce play, a breakout, a trend line, or a shelf, or whatever, a reversal of some sort, a retest of high of day. So that way, because I did that, and about a month or two into me doing that, I called it a secondary journaling system, where the first was just kind of going over my trades. What was my entry? What was my exit? What was my stop loss? Why was that my target? So I can identify, was it a good target? Was it a good stop loss? I realized that was working, but it was only kind of working. I was like, well, let me go over what setups I'm actually trading. And then I realized I was very terrible at pretty much every setup but bounce plays, and waiting for trades to come to me about 30 minutes, 45 minutes after the opening bell. And I realized if I just did that every day, and that's where I went back, like, I had about a 60% win rate at first. I'm like, well, let's just work on that. And then I got it to 70, got it to 80. But that's all I did for the first 2 years of my journey, was just waiting for bounce plays to come to me. And it got to where I got to now, to where I'm doing all kinds of different setups. And so essentially trying to find that fastball, your one curveball, find that one pitch, and then make it better each and every day.
And so what I've learned over this year is my fastball is the MACD. Is when, especially now I never shorted until I met Kevin. I was only longing. So when the MACD on the 5 minute and the 1 minute would cross up, that's when I would get into a trade. And now it's when the MACD on the 1 minute and the 5 minute cross down, that's when I would get into a trade.
So you've identified that edge, and that's great. So now you can do what Josh is saying, which is let the trades come to you. Because like newer traders, what newer traders do is they want to find trades versus the trades finding them. So now you know exactly what to look for. You don't need to overtrade anymore. We're going to eliminate that. We're going to stop oversizing on plays. That's the emotional dial on the trading account. So we're not over leveraging, increasing that bias, and then blowing up accounts on one singular trade. We want to avoid that at all costs. So we've identified a lot of great things here. I think the audience is going to find it valuable. I hope you did as well, James. If there are any traders out there that want to be featured on the show, you can email us, callinshow@tradethepool.com, and we're going to be absolutely thrilled and happy to have you on and discuss some things that you might have going on with your trading account. But that's going to wrap up the show for today. Thank you both for being on. Hope you found it valuable.
Thanks, man.
Thanks, guys.
I appreciate it.
Yes, sir.
Yeah, thank you always, as always, Kevin, and of course, James, talking to you. Love doing this, helping traders out, and like I said, we're doing this from now on. So if you guys need any help, reach out to us. We'll do the best we can.